Good morning, everyone. Welcome to Thursday's live stream. We have, what did we have this morning? CPI, CP something? Well, we had some news this morning. We're going to be talking about it. Stick around. If you're here for the first time, stick around. We're going to be talking about ICT concepts. We're going to be talking about fair value gaps, breakers, order flow, strategies, models, all that good stuff. Here to answer all and any of your questions. So stick around, hit the like button, subscribe. And also, if you're looking to take your trading to the next level, you can use the code DTJ and get anywhere from 30% off to 80% off your next evaluation account. That code will always be the most updated discount you can get on any of the firms. You got Take Profit Trader, Apex, and Tradeify. Lastly, I am doing a sale for the Purpose Driven Trader Academy. You can use the code THE4TH. You can use the code THE4TH and get 25% off if you want to take that step and join the Purpose Driven Trader community. I will go ahead and drop that in the chat here, the code THE4TH. And that's it for all the announcements. Let's go ahead, open in prayer, and then we will go ahead and get started. Father, we honor you this morning. Lord, I thank you for the ability we have to trade as traders. Lord, I pray that you would give us wisdom, that you would give us understanding, you would open our eyes to see, you would help us be patient and willing to persevere through the ups and downs of the market. Father, I thank you that your heart is good towards us and you know what's best for us. So Father, we trust your leadership. We thank you. I thank you for everyone here that is on and those that will join. Lord, I pray a special blessing over each one, that they would grow in their relationship with you. They would grow in maturity. They would grow in their walk in Christ and grow in their journey and venture of day trading. Father, we honor you and thank you. And everyone said, amen. All right, so as you can tell, I've already started with the shrunken face so I don't forget. Actually, I forgot to switch it, so either way, I'm forgetting something. All right, let me turn down the desktop. I feel like it's a little loud. Maybe it's just me. I'm still trying to find that perfect balance. And my lights, you're not going to see a purple background today. It ain't going to be as pretty because it's making this like crackling noise. It's quite annoying. Okay, so a couple things here now that we're going to get into the charts. ES has finally hit all-time highs. As of this morning, as of the news candle at 8:30, we slapped the high. So we have both contracts have hit all-time highs. And NQ also squeaked up there and slapped the high as well. You can see right there at 8:35, it ran that high. So what should we expect? Well, we had one down day on the Nasdaq, but on ES, guess what? Not a single black candle, not a single red candle on ES at all here. We got 8 straight days of green. Pretty incredible. Well, we know that can't be sustainable. However, this looks very bullish indeed. With this candle here, today is going to be a big factor on how we close. Okay, how are we going to close today? Are we going to close above the monthly opening price? If we do, we can potentially see that hold and move higher, which we're at all-time highs. So we expect, we anticipate, we look for higher highs. So, hang on, my son put on my cup backwards. So we have that as part of our narrative that we need to consider today. If we drop down to the 4-hour, we had that beautiful displacement of the 4-hour order block. We displaced lower, we tapped it, and we respected that 4-hour order block, but then we dropped, swept the lows, and then we catapulted to new highs. This is what I expect. This is the kind of narrative that I'm going to continue to anticipate, because the truth is, anytime we sweep a low or hit some type of daily, hourly, 4-hour fair value gap or imbalance, it's going to use that to try to push it to new highs. Okay? So with that in mind, we have a new 4-hour fair value gap. Okay? We're going to get rid of some of these here. And let's take a look at this 4-hour fair value gap. I can see price wanting to reach down into and rebalance this 4-hour fair value gap. If we drop down to the hourly, we're going to see something similar. And that is a beautiful, beautiful breaker sitting right here. We'll drop down to the 15 before we put something on there, because I want to see where the high's right here, but I want to see what it looks like here. So we got a beautiful hourly. See, that's what I'm talking about. See that order block right there? I would want it to come below that order block, which is right where the 4-hour is. So that means I want to anchor this probably on these bodies, on the body high right there. That's where I want to anchor that breaker. It just has better correlation with the rest of price. Okay, does that make sense? That's why I'm setting that up. So potential breaker, if we see any momentum to the downside, that's what I would be looking for as support. We got Asia low that hasn't been ran. London high and London low have both been tagged. And I don't see data low opportunities. I don't. Data low opportunities, in my opinion, are non-existent. There's not really a wick here for price to want to come back and grab. We've ran the data high. I'm not using the data low as a potential draw, okay? So I'm not even putting that on there. If I'm going to use a draw, it's going to be these relatively equal lows sitting right here inside the new day opening gap, which we have marked out. So we have all the important levels. We have our previous day high also sitting down here as well. And everything else is pretty good. We got our opening range gap that I've already marked out. The level is down here, but we tagged it to the 415 closure candle, which is sitting over here. So 415. Right there. So we anchored it to that candle. Maybe I didn't. Doesn't look appropriate. Let's find out. There we go. All right. All right, we are still pushing higher. Good morning, everybody. Let's say hi. Ted, Vintage Trader, Jonathan, Plumex, Morton, Dewald, BC. Good morning. Good morning. Morton, Matthew, Lawrence, Ivan, Wendy, Ken, Jose, Jeremy, Octavian, Jose, the U-Meister, U-Mister, I think. John, good morning. Charles, James, Elena. Good morning, good morning. Glad to have you all this morning. Faith, good morning. All right, let's go ahead and we got 27 seconds for the market to open here. I am not taking the 930 model. No, I'm not going to take it at all-time highs. I don't think I've ever really tested opening price at all-time highs. I mean, and that's exactly where we are. So we're not going to do it. I think that was a wise decision. What do you think? I think so. I think that was a wise one. I think we're getting smarter, folks. We're getting wiser. Over time, we make better decisions because we've made so many mistakes that we just don't want to make them anymore. All right, I need to open my copy account. Give me a second here. Yeah, I'm not messing around with that. You better believe it. But what we can do is mark our 930 level. And let's see if we get a 930, 931, or 32 fair value gap entry, which I expect we will. And I'm not opposed to trying to take a long from that, but it's probably going to be a smaller size overall. Remember, we're considering, I'm probably going to consider this some manipulation. I mean, that's a big candle there, folks. 38 points. So here's the thing. 930 model, I'll give just the basics. If you want to do the research, I have it in the Discord. It is roughly a 50% win rate, but the winners are amazing. I would have preferred it to be to the downside, not bullish, but it is what it is, I guess. It has been tagged. So if it closes in here, I'm going to do 1 micro because I'm already thinking about the size. This is a large fair value gap. I'm taking 1 micro long right here. All right, so the idea is you move your stop loss is going to be at candle 1. So that is the stop loss, and we do a one risk 1R trade. So if we look for a long position, we got in roughly right here. Stop was right there. That's 39 handles. So we're going for 39 as well. That's what our target's going to be. And that target is 23,010 is our target. Again, this has roughly a 50% win rate. So you decide if you're going to participate in it. I just gave you all the numbers. Thank you, Matthew. The only way I know I can build confidence, and really you end up paying more attention to trades or to ideas when you actually have money on the table. So might as well do the smallest amount of risk and see how that plays out. I don't think this is copied. No, it is not. So this is not even copied for me. I thought it was. I might add a contract here because I kind of do want it to be copied. I'm not. I'm going to let it play out. So this is a single micro. I'm going to add, since it's really low risk for me, I mean, it's not even too, I'm not even, I think I'm going to add one more. So I'm at 3 micros on this individual trade that is not copied. This is one single account, not copied. We'll see if we can get it. Sometimes these trades can take up to 30 minutes to play out. That's just the truth. It can take up to 30 minutes. I think the average time I had was about 15 minutes for a trade. So some of these go really fast. Some of them kind of do this consolidation dance for a little bit. I did one trade last week. I'm gonna be doing more with gold, just not at the moment. I probably will add another one on the pullback. The reason I added one on the top of that green candle is because we closed above those 3 down close candles. So I consider that an order block. Now it could be just consolidating right now, but if we were trending, if it was a bullish trend higher for the short term, then this should have been respected. So I was assuming that this was an order block being put in, and we should respect that level right there. That's why that was added at that point. The only reason I added to this account is because it wasn't copied. So I'm willing to take a little more risk, because normally when I'm taking 1 micro, it's copied on 5 accounts. I'm still taking less risk if I was to take 1 contract on all my accounts. I mean, this is still less risk overall in the grand scheme of all my accounts. So I'm still very low risk right now. It doesn't bother me. If we get stopped out, I'm completely okay. Okay, that fair value gap has now been fully rebalanced. We'll see if it finds support here. Gives us a wick and a green candle. That's what I'm looking for. Probably looks like we might get stopped out. I'm actually gonna move my stop to the low of that green candle. It's right beneath the 930 level. And that's kind of what I'm looking at, is it's staying above 930. Oh, I was hoping that we were gonna get a green candle there. Oh, I was hopeful. We're probably gonna get stopped out here now. Oh, there's the tap of 930. That's what I wanted. That's why I moved it. Let's see if we can get support from 930 and we move back higher. Let's go, boy. We're in a trade there, Jaeyoung. Took the 930 fair value gap, entry long, seeing if it will play out. It's a 50% win rate, so I fully disclosed that to everyone that wanted to participate in this trade. Just added one contract to lower my risk. They're still under what I would normally take with one single contract on all my accounts. So still, I would consider myself de-risked. Oh, come on. NQ, that's right. Yes, sir. That's what we're doing. People on here, if this works out, they're going to be like, no freaking way. No way. No way. We're looking at the Nasdaq. This is the Nasdaq. NQ. We do have a breaker in right here. So keep that in mind. We do have a breaker sitting right here. Let's see if we can get through it. If we can get through it, I feel very optimistic. If we can't, it might be worth de-risking. All right, we closed beneath it, but the next candle closed above it. Let's see if we can get an aggressive push here. Come on. Sure it's not. Okay, we're good. Ooh, gonna sell one contract. Probably sell 2 contracts right there. I'm down to 2 contracts for this right now. I don't like the close of that last candle. That is the main reason why I reduced my size. You bet. I'll turn that bad boy down. That's trade of 8. Harrow, it's that bro is not a bro. Just FYI. It's a chica. Chicas get bros too. Bro. Yeah, I know my kids try to call me bro. And when they do that, they get a freaking death stare. I'm like, I'm not your bro. They even do that to my wife. I'm like, she's not your bro. Just whoosh, smack them on the head. All right, so I'm curious, who decided to take this trade with me and is holding through that drawdown? Who's going through that? Because this is also can be an exercise on your ability to follow the plan, follow the stop loss, and not move it around. I mean, I'm glad I decided to adjust my level to the low, because if I didn't, I would have been stopped out by a freaking tick. That would have been horrible. Now it still could tap me out here. It could drop. We're failing to make a higher high here. But I'm just saying, this is an exercise on you being able to follow a model. You name the model anything you want and just letting the trade play out as it's designed to do. It's a great exercise to do even for yourself. Way to go there. If I can get a close above this right here, I might do an add-on to that position. Add back into it right there. We can get a close above that. Here we go. Here we go. Get ready for some pumpage. That's a big deal. And it doesn't, honestly, Octavian, it doesn't matter if you win or lose. It matters that you followed your plan. That's what matters on this trade. Right? I told you that I told everybody here, 50% win rate on the first fair value gap going long or short. Okay, so we took it. We almost got stopped out. If we got stopped out, that would have been a negative winner. What I call a negative winner means it was a loss, but we followed our rule. Now, maybe the trade model itself is just not very good, and that's okay. But your job as a trader is to be able to follow the rules and keep your emotions out of it. Now, you can see different indicators in price action, like right here. When I saw this wick right here, I sold 2 of my contracts because I didn't like what it could entail. We have a breaker, we have an order block, we're at all-time highs. That right there rebalanced everything else. Look at that right there. Let's go ahead and add 2 contracts, see if we can hit our levels there. Don't completely retrace on me now. That was our close above that, as I said, which I told you I was going to do that. If we closed above this, I was going to add 2 contracts. It just unfortunately closed way up here. But I stuck with what I was planning on doing, with the expectation that this is just a continued expansion higher. While everybody wants to go short, the market is pushing higher. I'm not happy with those 2 entries. I wish they were down here a little bit lower. I really want to see this fair value gap hold. If we can't hold this fair value gap, I probably will I'll close my position. One of the other rules that I have on these 930, 31, 32 pump and dumps is that if you do get inversion after the expansion, I close my trade. So that's why I mentioned if we close below this inversion, I'll close the position. These are just the rules that I've set for myself on the trade. Come on, baby. Hit my level. Actually, it's not after the expansion. It's if we're within 10 points of the target. So if we're within 10 points of the target, that's when you close the trade at the inversion. We're within 10 points of the target. So if we inverse this fair value gap, we're out of the trade. Not gonna lie, I don't like this candle. I got a weird feeling about this candle. It's on my chart. The SMT is on my chart. Right there. 955 and 951.
Order submitted.
I'm going to close the position there. Let's see if that was a good decision or if I was being emotionally driven. I just didn't like how I was seen next to that. We're probably going to go up and slap it, but there is the 930 pump and dump for you guys. We came within 2 ticks of our stop loss, all the way back to just shy of our take profit, and we're probably going to hit it here. I just sold slightly early. That was a good exercise. Good exercise on trade management, on sticking through the drawdown, keeping our stop loss where is appropriate. Sometimes for these trades, when the candle 1 is higher or lower than candle 2, I'll just put it on the low of candle 2. I put it on the low of candle 1, and then we moved it to the low of candle 2. And that decision, there would have been the slap right there. Right, I should have waited for the news candle, huh? Should have waited for the news candle. All right, let me get everything set up here. Nice win, nice exercise there. See how you can't bet against all-time highs? Don't bet against all-time highs, folks. Ride the train. Thank you, James. You need a little help with what? Yeah, I totally get it, Ken. 100%. If you guys appreciated that commentary, if you appreciated the trade management, liking the analysis as we're going through the trade, do me a solid, hit the like button. It's 4th of July. Everybody's happy. Everybody's happy. I would greatly appreciate it. So, then hit it 3 times, Ken. Just messing. To find the stock, okay. On the top right corner, you will type in those exact letters and numbers to get this contract, okay? So if I type in N, it should pop up. You should see it on my screen. Let me remove that. Okay, so NQU 2025. Make sure you have the futures selected. Put in those letters, and then you'll see this come up. You select that, and boom. You'll have it. No reversal right now. Take a beat. You're done for the year. You got 6 months left. A reversal ain't gonna happen till probably 11 o'clock. And that doesn't mean we can't see price go this way before 11, but I want to see structure. I want to see a change in state of delivery. This is not structure. This is structure for a bullish move. Okay, I need to see it do this. Something like that. Does it close early today? Who can tell me what time it closes? Yeah, no, you could have, the U-Meister. I understand what you're saying, but when I back tested over 2 years, probably 7 years of data total, when you get this bullish candle and you get a fair value gap entry, it tends to continue 50% of the time. So this was one of those where it just decided to fill the whole thing before it moved. It could have as easily failed. But we took the trade and it won. So nice risk management. We didn't oversize. I probably shouldn't have sold early. I probably should have just let the trade play out, understanding that we are in like this parabolic state, and just let the trade play out instead of worrying and constantly being concerned about a massive pullback. That's the thing that constantly gets me, is I'm worried about the massive pullback. And, well, guess what? We never got it. We never got it. Yeah, I sold right around 23,000. That's where we sold. Benjamin, don't fill the watering can up at that high so it doesn't spill. You have your thumb on it. No, we don't. But this is where your risk management and letting a trade breathe and play out is important, because technically, even on a pullback, even on this pullback, guess what we didn't violate? We didn't violate this order block right here. We didn't violate any order blocks. So even in this giant pullback, it was still indicating a bullish move. It would have changed when we closed below this order block, but we didn't even do that. That's what I'm saying. It's like all the indicators in price action were supporting a move higher. Here's your order block. Here's another order block that was respected. Here's our last order block. So if I'm watching this move, I'm watching that order block. If I'm considering, man, I want a place to get in, this would be your consideration. If it violates this, your next consideration is this fair value gap, right? We're just looking at opportunities. We're looking at higher lows to get in at to take the ride. Yeah, I know. You just give perspective. All right, let's do our daily affirmation. Let's we need 8 more likes. Let's hit 70 likes. 70 folks, and then we'll do our daily affirmation. It's a good one. It's a good one today. It's based on a scripture in Ezekiel. No, I don't. I don't look at the VIX. What you see is what I look at. Is there a Walter? What determines your fair value gap? Oh, I missed that, Walter. Thank you for answering that, Matthew. If we look at these 3 candles right here. Candle 1, candle 2, and candle 3. Candle 1's high to candle 3's low. That's the fair value gap. This is where price has not efficiently delivered sell side price action, meaning we got a green candle that filled made this candle, but we haven't had a black candle fill it. Okay? When you look at balanced price ranges, look at this for example. What do we got? We have a green candle that creates the fair value gap, and what does price do? It delivers a black candle into it, or red candle, to balance this area. Once it's balanced, it has permission to move lower or higher. Now, sometimes it will leave it for a later time to revisit. So you'll see if we look lower, we'll see fair value gaps that haven't been tagged. For example, we get way down here. Here's one right here. This hasn't been retagged yet. So at some point, price is going to want to rebalance that. And we use those levels to determine where price may draw to at a given point in time. Hopefully that answers your question, Walter. So, speaking of unfilled fair value gaps, that's why I have this one marked out. This would be a point of interest to take a long if we expect price to move higher. You don't want to take the long here because this can happen. We get the pullback into those fair value gaps. And then if you are long here, you're in extreme drawdown, and then you sell down here, and then it goes in your direction. So we wait for the retracements to take the expansions again. Patrick, I think that's what I'm saying. Hopefully you're agreeing with what I'm saying. Too high is a personal bias. It's a, I don't know what, not a confirmation bias, but it's a bias that we as individuals have. What makes this too high to say we can't buy it anymore? Nothing. We've just been we just have learned that when it's up here, we get afraid that it's going to come all the way back down here. But the problem on trending days is it typically doesn't. You might get a small retracement. So what do I have marked out? I have marked out the points where price could retrace to. So now we have another order block right here. Small, tiny black candle. And that's the high of that candle. So I just mark those out if I want to keep track of when price retraces. Do I like the level when it comes to it? Does price stop and respect it? Does price blow right through it? So I can keep track and monitor those levels. Oh, there we go. All right, let's do our affirmation here. All right, our daily affirmation for today. It's a good one. This is based on Ezekiel 37:5. Today is July 3rd. Speak life where there is dryness. Excuse me, not is. I made sure that this was very important that I didn't put is. Speak life where there was dryness. I trust God. I speak life where there was dryness because we're prophesying that it's not going to stay dry. I trust God to revive what seems dead. Today I trade with bold faith, believing in his promise to bring things to life. Ezekiel 37:5, the angel of the Lord says to the Son of Man, can these dry bones live? And Son of Man says, only you know, Lord. And the angel of the Lord says, speak to the bones. And he does to the north, south, east, and west, and they come to life. All right, look at that candle. I'm not taking this, but just, did I switch? I never switched. Let's do that again. I'm sorry. All right. Daily affirmation 733. I speak life where there was dryness. I trust God to revive what seems dead. Today I trade with bold faith, believing in his promise to bring things to life. You might feel like your trading journey is on its last leg, that your account is about to fail, that you will have to call it quits. Speak life, the Lord says. Speak life into that situation. Speak life into your trading. Use your words. I'm currently creating a video on this very topic. I talked about it in depth yesterday. Your words have power, folks. Your words have immense power. All right, so we have retraced. The first candle respected that order block. The second candle's body respected that order block. Now we're on the third candle. Where does this close in the next 24 seconds? Is it going to close above the body of this candle? Because that's what I'm looking at now. Look at that. Let's see if it closes. That's signatures in price that it might be finding support for a continuation. Okay, it closed beneath it just slightly. I would still wait for further confirmation, maybe seeing if it wants to reach down to the next order block. Maybe this one's just too small, not significant. Maybe it's registering this one. We'll see. Maybe it's ready to reverse. Well, I don't think so. I think we're going to get either another pump higher or we're going to get a failure swing to move lower. I'm going to take a long here. See if it wants to continue higher. Do you see how the bodies were staying around here? That is saying to me we may go higher. So I'm going to take a long and see if it in fact wants to go higher. I'm going to set my stop loss, be very at the midpoint of the wick, and then I'm going to set my target at the highs. Screen, there it is. So tight stop, it's only a 3, 5, 7 handle stop loss. My only concern is this fair value gap. I want to see it push and close through it. If it wicks into it, that's an imbalance and it could find resistance there and move lower. I'm going to set a sell limit there for one contract, and then I'm going to leave a runner to see if it wants to continue. We made equal highs. Equal highs means I should probably take profit. So I'm going to move my stop to break even. So now this is a free trade for me. I'm going to see if it wants to continue higher, not just get scared out of the trade. If it fails, it fails. It's zero risk for me. And it's so close to my profit target. We'll move the second one a little bit higher, because then we can take a standard deviation and see where could price reach to based on that price leg. Let's see, one standard target. So we're looking at 23,088 as a potential target. So I'm gonna move my last target up to there and see if it wants to go 1 standard deviation. And then I'm going to move my other target to be, oh, I already got both my other 2 targets. All right, so there it is. I got 1 contract left. That's at stop. That's at break even. We'll see if it wants to give us a push higher. If it doesn't, this could be the failure swing or the reversal candle. I mean, it looks like it wants to roll over here, but we're gonna go against what everybody else is thinking. Everybody thinks, oh, we have to be turning here. This could be the high. This is the high. I'm gonna go short. I'm turtle souping this. It all depends, Octavian, to answer your question. Neither is more value for value gaps, I would say, but a higher time frame order block usually is a lower time frame fair value gap and breaker. And then you want to look at confluences. How many overlapping confluences are around that order block or fair value gap? Those are really, so when you have a fair value gap and order block together, those are awesome. Run, baby, run. Come on. If you guys are appreciating this, the past 3 days have been phenomenal trading. I don't know what's changed. I honestly don't know. But it's been phenomenal trading. So hopefully you appreciate that. Hopefully you'll have enjoyed it as much as I have. I'm very grateful. All right, we're coming up till 10:30. So here's where I'm either going to get stopped off or it's going to run in my favor aggressively for the short term, maybe for a candle or two. But we're going to see some animation in the 9:30 candle. I just don't know if it's going to be higher or lower. All right, give me the push. Give me another push higher. Why don't you? There was a sell-off, Liam, right around 240. I took a short. Was it 230? Maybe 230, 240, somewhere around there. We had a manipulation leg that ran above all the consolidation, and you could have took a short right there. Most of trading is boring, folks. Most of trading is a lot of waiting. This is prop firm. This is a prop. This is a copied account. These are copied, right? I think these are all take profit trader accounts. All right, so this is the 930 candle. I told you it was going to have a little animation, didn't I? So let's see if it can make a higher high. If it can't, I might close it. I'm going to close the trade. Let's see if that was a good decision. There would have been my break even. I secured 20 points or 20, basically 10 handles on that. Let's see if closing that was a good decision based on the manipulation candle that I saw. Right now, AJ 5. That's all that take profit trader allows you to copy. Maybe I sold early, folks. Maybe I got manipulated out on the consolidation. This is why being patient is like everything. Don't count it out yet. Let's see what happens. Here was the trade yesterday. It wasn't very big. High, low, higher, high, breaker. There's your entry right there at the 406. No, that wasn't the candle, was it? That wasn't the candle. Am I on the right one? Why do I feel that that's the wrong time? I feel like that's what I did. Oh, this is Monday. I need to go to Tuesday. I don't even know what I'm talking about anymore. Wait, Tuesday or Wednesday? Do I need to go to Wednesday? It's Wednesday. Right there. When we had this candle manipulating higher, you could have took this short right here to this low. But because of all the consolidation, it wasn't an A+ setup. But it was very I mean, look at that nastiness. The only reason it became of interest is we swept those equal highs and aggressively started moving the other direction. So you could have gone to the 2-minute time frame and taken that trade right here at 310 on the inversion and ran it to the low. Close of that candle. Target being the low right there. Not very many points. Barely 10 points. Alright, so it ended up hitting my stop. So I'm glad I sold the contract when I did. Now we're kind of just sitting and waiting right now. Waiting for 11 a.m. to take place. If we jump to the 5-minute time frame, we have a 5-minute fair value gap right here that we haven't tagged yet. So we could literally do that and move higher. 15-minute time frame, we could tap this fair value gap and move higher. Honestly, that's the expectation that I have unless we see aggressive displacement that violates these areas. You can see aggressive price action that can still be bullish. It's just trying to manipulate you into going short and then it just goes long, right? So there's our the 15-minute, and then this is our 5-minute, which basically overlaps with the 15-minute almost perfectly. That is a C. So right there. And then if you want it even more refined, you go down to the 1-minute. So when you have the 15-minute candle, fair value gap there, the 5 minute there and the 1 minute here, you can look at all the areas that overlap. That would be the safest area to focus on. It may not come and reach all the way down there though. That's the thing you have to be careful about. So I like when I have overlapping fair value gaps. I zero in on the lower one that's within it. We'll keep that manipulation leg, or we'll see what happens with that. But we're pretty much consolidating, so I don't want to do anything right here. We want to find out where it wants to go from here. Okay. And even if we don't, I mean, I'm up $500. I can be happy with $500 for a day before the 4th of July. Maybe we just don't take another trade and we just happy with what was given to us, you know? Find contentment in your trading. It's not easy. $500 is $500. I mean, $500 is my grocery budget for a week. It's a little less than, it's about $400. But even if, guys, this price action right now is nothing desirable, I would not be in a trade. If you're in a trade, you need to ask yourself, why are you in a trade? We're literally consolidating. We're in a consolidation range. From this low to this high. That's our consolidation range. I would not want to trade anything until we're outside of that box. Look at ES. What do we got on ES here? 1 minute. ES is moving higher, but NQ is not moving. So the question is ES leading the way, or is this a manipulation before a reversal? Folks, I have to take this. Hang on a second. Sorry about that, folks. I had a rental property. A tenant just move out, and I walk into the bedroom yesterday. Their bedroom, the place is a mess. They didn't clean it at all. But I walk into the master bedroom, or it's a one-bedroom apartment, and the carpet. There's more stains than there were carpet. I mean, it was so bad, so bad. So I'm like, I'm not trying to clean that. I'm just gonna replace the carpet, something cheap, make it look. I mean, anything would be better than what's currently in there, man. It was bad. It was bad. So that's what that call was, to get some carpet installed. You said $500, but that's time 5. No, I combined the total amount. I made $100 per account, because I only took 3 micros on that trade. Brett. BC, how often do I use confluences? I would say what matters on confluences is when, okay, so let's say I'm looking for all-time highs, okay? Let's say we're going for all-time highs on NQ and we're going for all-time highs on ES. Well, if ES hits all-time highs first and I haven't hit it, I'm going to be very cautious about taking my trade off, because there could be an SMT there, right? There could be ES. I mean, take a look at this price action right here. We have, look at this. So ES, look at this candle right here. Okay, that's a high. Look at this candle right there. That's a lower high. Well, here's that high on ES. It's way lower than the high here. So we have an SMT, right? We have an SMT. That could happen. So when you're identifying your targets, if a correlating asset hits the target and the trade you're in has not, you might want to consider taking a partial or closing the trade altogether, because it may not hit if there's an SMT. That's how I use it. Okay? Or if I'm looking for a short, okay? Let's say I'm looking for a short and I have a key level right here. ES has hit the key level, or NQ has hit the key level for my short to take place, but ES has not. What I personally would do is wait for ES to also hit it, and then I can look at taking the trade on NQ. It goes hand in hand. Maybe there's an SMT and it doesn't hit, but maybe it does hit, because I've been in a trade on NQ so many times where I'm like, why isn't it moving? And then I look over at ES, and then there's a 15-minute fair value gap that ES is hovering right below. And as soon as it hits the 15-minute fair value gap, both indices just drop. So you can use it as far as correlating when the right time is. Or if you're trying to be patient in your trading, you can see the other asset and say, oh, well, we haven't hit this. Maybe I just need to cool off and just not freak out that we're still consolidating on NQ. That's how I would use it. Hopefully that makes sense. Stepped away. What's your thought on growing your personal account? No prop firms. I know it's hard, but possible. Yes. So to give you perspective, I started a small account challenge at $500. I made a mistake and I took 5 mini contracts on only $500 and took like a 10, 20 point loss and dropped my account all the way down to $200. So from that $200 level, I took a break. Because I was irritated. And then I slowly started building it one trade at a time. And it is not easy. It is not easy. I would say on that, here's the journey on that personal account, because literally it's almost impossible to have proper risk management because any one micro is too large for a $200 account. It's too large. But you can't go any smaller than a single micro. Okay? So I would build it up to 400 and then I would have a loss and then it would go back down to 200. Get it to 500, go down to 300. I did this pattern so much because it's such a psychological issue with such a small account. You're so concerned about losing it. It's very difficult, but it's possible. That account now is sitting around $900, just under $1,000 on that personal account. And I've intentionally not added to it because I'm working on building that muscle of knowing that I can't add to this account. This is it. So am I going to trade it as if it's a one shot chance? I don't have another shot. I can't blow this account. I can't buy another eval. Can't get another prop firm account. It's a one and done type situation. So is it possible? Yes. Should you do it? Yes. Because it's a muscle you will need to grow. So either you first need a foundation, demo account, evaluation accounts. Once you have that foundation and you've started to take payouts on, let's say on a prop firm account, at that point, I would begin to feel confident about building my personal account. And that's what I did. I started getting payouts. I'm getting payouts and I want to build that personal account because I don't want to play the game forever. I want to have my own account. Now I could build up all my prop accounts and just dump a bunch of money in there, but I don't want to do that personally because I know that I need to build it from the ground up if I'm going to keep that same mentality of, hey, I can't just risk randomly on this account because if I do, I'm going to blow it. And if I blow it, it's going to hurt way more than blowing an evaluation account. So it's definitely possible, but you have to take the time and you have to have very strong rules on what you're taking. Specifically risk management rules. So if you haven't watched my last video on how to win the mental game of trading, it's my latest video. Watch that video so you can have the correct mindset and approach when it comes to risk management. All right, so we are tapping now into the 15-minute and we've tapped into the 5-minute. So how do we react around this level? We're still tight consolidation. I don't like it as much, but we are in the 11 a.m. macro. It's just nothing here is screaming my name to go short. I would probably say it's more about a long than anything. If I'm gonna take a long, there's this inversion right here that doesn't look bad. It doesn't look bad, and we just swept the low, this low right here. So from sweeping this low, if we get strength into the close, I will probably take that to the high. But if we dilly-dally into the fair value gap and then close without aggression, I'm not probably going to take that because in my mind, I'm just playing inside this consolidation again. But if there's clear aggression, to me, this is a manipulation, sweep of liquidity, followed by expansion. So what is the power of three? Accumulation, manipulation, distribution. That's how I would see it. But the candles have to tell me the story that we're distributing. If it's not telling me the story that we're distributing, well then I don't want to take this trade. I've caught myself taking that trade because I was trading patterns, I was trading signals and not watching order flow. It's way more valuable to understand order flow and understand what the candles are doing so that I don't take an improper trade and end up hurting my account. So far, we swept liquidity. If we get nice bullish candles, maybe. But if we're going to dilly-dally around, I'm not going to take it. Now, it could dilly-dally here and still run. Yeah, that's fine. But I'm looking for very specific signatures and price that I can rely on. I say rely because you really can't rely on anything, but you have some intuition that, hey, I've seen this happen before. I think I want to take this. There's conviction behind it. Hopefully that helps. I apologize. The chat's moving in a decent way. I don't mind it. I really like it moving. But if you didn't get your question answered, just repost it. And I'm not going to scroll through the chat to find it. So repost it if you have a question. Yeah. Hero, is it Hero or Hero? Perez is correct. He has a very good point. Price had a retracement down into a fair value gap. Fair value gaps is where you get strength for a bigger move. So that would be the other reason behind it. Now, see how this is nice? If we get a nice close and it doesn't close inside this, I probably consider taking that long. Now, am I going to do full size? No, because we are in consolidation. We have expanded. We have a potential for a reversal. So there's multiple things that are going on. I don't take, this is not a full size type of trade. This is a, yeah, I see it. I've seen it before. I'm going to take the risk, but I'm going to de-risk a little bit for the opportunity. All right, so I would want it to close on this next candle. If it doesn't, I'm not interested in it. I'm okay with this coming lower because see that fair value gap right there? Dip into the fair value gap, rebalance it, and then expand higher. I'm okay. I'm open to that. But it needs to be with intention. I don't want to trade this going higher. Copy, paste right here. Don't want that. This can be considered a propulsion block right here. So we just dipped down into this order block. We hit it. Now we want to see aggressive price action higher. That's where I would get excited about taking the trade. But I need to see aggression. Yes. We also want to see aggression. If we don't get aggression, I don't consider it a propulsion block. No, it's not in a downtrend short term, Patrick. Why would I say that? I don't see any trend happening. And if there's a lack of a trend, we call it consolidation. So this, even though it might be moving lower, this is consolidation. That's what this blue box is for. To remind us that this is consolidation. All right, that's 11 o'clock. Body hit the propulsion block. We'll see if we get an expansion here. Not too excited about it, to be honest. Honestly, I would prefer to see it come back down into the 5 and 15 minute again and then run. Why? Take a look. We have a 30-minute fair value gap right here, and we have an hourly potential fair value gap forming. I would want it to come into the 30-minute fair value gap before the expansion. It may not give it to us, but that's what I would prefer. So if it fails, that would be the reason it fails, right? Internal swing high would be our target. Risk to reward is not that bad. It would be about a 1-to-1 if it closes right here. If it gets too close, then we're not interested. Yeah, too small targets. I'm not interested. I'm not going to take it. The risk to reward is not worth it. $4. It's all pretty small. I'm not going to take a $4 4-point trade. It would need to run up here for me to do that. So valid entry, valid setup, just the risk to reward for me, I don't want to take it. All right, this is the carpet company calling me back. Give me a second, folks. You honestly can use this as an entry right here. It's not bad. It's just we did sweep that minor buy side liquidity and we're in consolidation. It's not a Nikhil. Do I have that right? Nikhil. It's not. The fair value gap entry is the confirmation for higher time frame structure and order flow. If you're taking a trade only because you see a fair value gap, you are going to fail. You need to be taking a trade based on order flow, right? So why did I take this trade here? I took this trade here because we had higher time frame order flow, and I felt that this fair value gap was going to support price. It almost stopped me out, but ended up running in my direction. Then what did we have here? We had another drop down, respected the order block. I used this order block as my entry, expecting that we are going to see a new high. We did. I was hoping to see more, but we started consolidating, and I ended up getting out of that trade in profit somewhere around here, I believe. What time does the market close today? I don't know. We're going to be done here shortly. There's no reason to keep trading. This is kind of what I expect for the remainder of the day. We're sitting here maybe to see if we get a drop back into the range. Not sure we're going to get that. This is not price action you see before a drop. What you can see: accumulation, manipulation, distribution. That's what I would want to see. So I would want to see another run higher, followed by aggressive price action lower. Yeah, we have 2 hours before the close. Honestly, guys, I think it would be better not to take another trade. I'm going to be happy with the small profits that I've made and just build it day in, day out. I'm closing my accounts there. And I'm going to call it a day, folks. I think it's wise to walk away. Yes, there might be something that comes, but go enjoy your family. Go do something else. Go study. Go back test. Price action here is not going to be really help you in your growth as a trader. So we're going to cut it off there, guys. God bless. Use the code THE4TH if you're interested in joining the Purpose Driven Trader Academy. Use the code DTJ to get anywhere from 30 to 80% off your next evaluation or performance accounts. Those will be the best and most updated discounts around. With that, guys, happy 4th of July. No stream tomorrow. We will be back next Monday. That is the 6th. That is the 6th. Let me just double check. We'll be back the 7th. And then, just FYI, I am going on vacation the 8th. The 7th is actually my 18th wedding anniversary. 18 years. Does this face look like 18 years of marriage? Yeah, 18 years I've been married. So we're going to be celebrating that, but we're going to be doing a quick family vacation. We're going to go on a quick fishing trip. So I will be doing a stream on the 7th, but we'll be gone on the 8th and 9th, and we'll be back on the 10th to finish out the week for some trading. So with that, guys, God bless, stay safe, and we will see you all next week. Happy 4th of July. Bye-bye.